You are moving into a world in which growth is dramatically slowing. You can't have it without stimulus. I'm going to talk to you about what's happening today, right now, and how this affects you. We're going to look at the economy. We're going to look at the markets. I'm going to show you some details that you just can't get around. So this information will be important to you to pay attention to. Let's begin right here with this. Downtown San Francisco office building sells for 66% less than the assessed value. You might say that this is just one example. This is just one building. And while that article is covering it, you got to understand what's going on here. My name is David Quintieri, and I've been looking into this information for well over a decade, breaking down this type of data every single day. I do this looking at it and actually bring you these bits and pieces. And while it might seem like separate information on a given video, I've been connecting the dots every single day. In this particular article is talking about the situation of San Francisco. You've seen the people walking around the city showing you how empty it is. If you look at the different barometers judging these cities and how empty these office towers are, it is frightening because you're looking at it 50%. The major cities in the US are at 50% occupancy. What does that tell you about, number one, commercial real estate and how viable it is right now? Number two, the work from home scenario. And then, of course, number three, most important, save the best for last, the debt associated with these buildings. You think those big towers, oh, they got so much money, those are all paid for? Absolutely not. They're not paid for. They're all based around debt. So they have these things called commercial mortgage-backed securities, which, just like the mortgage-backed securities we learned about in 2008, it's the same kind of circumstance here. And those commercial mortgage-backed securities might be based around office real estate. They might be based around retail, might be multifamily. It depends. But we have to know which one is which, number one, and you got to watch your exposure to that. You don't want to touch this stuff. Let me tell you, okay? What we're looking at right now is that interest rates are all connected with what's happening with the debt circumstance. And you are going to see that these rates will need to remain high for longer if, big if, they want to resolve the inflation problem. Do they? We'll see. Markets refuse to believe it. Markets right now, when you look at the swaps and the futures, a lot of technical jargon, those swaps and futures are dictating that there's going to be 1% worth of cuts next year in 2024. Let me show you something. The path isn't easy. A study done by former Fed Vice Chair, looking at this between the 11 monetary policy tightenings from 1965 to 2022, found that 4 of them resulted in something that was kind of like a successful outcome of a soft landing. Well, the rest were hard landings or a reacceleration of inflation 2 years later. There are risks on both sides. I think we're going to have a pretty good sense of this by next spring. So what does that tell you? That the Federal Reserve needs to keep interest rates at elevated levels into the spring. What happens after that when they start to cut interest rates? Nobody really knows. But we will see what happens here and understand that you've got $1 trillion worth of interest rates, of debt with these interest rates at these levels. $1 trillion of interest rates, $1 trillion of interest payments on this debt. Oh my, I can't even wrap my head around it. I'm going to show you, though, where your money is going. Would you be interested in seeing that? If I told you that 88% of your money was going to non-productive means, 88% of your tax dollars were going to non-productive means, would that be something to pay attention to? I think so. We'll check that out right now in the next part. Goldman Sachs economists anticipate that the Fed will start lowering interest rates by the end of next June with a gradual quarterly pace of reductions from that point. Okay, I think you get the point here. that the belief is into next year. Funny enough, we were talking about 2023 where they start cutting interest rates. Now they're all saying, well, it's going to be a soft landing, so they won't need to do that. Well, why are they cutting interest rates? Because they always cut interest rates when there's a crisis. So you're telling me it's a soft landing. You're telling me there's not going to be a crisis. So why are you cutting interest rates? Kind of weird, isn't it? All right, Tokyo's inflation speeds up again as Japan's output sputters. Funny enough, they have no intention whatsoever of dealing with their inflation because they've committed to quantitative easing forever. They will never do that until the currency has no value and until every last real human being investor has left the country. All right, we got to talk about something that is the slower economy. This is something that is really, truly very likely at this point, all into next year. More debt and higher rates. You've got higher prices as well. How do you think people are going to react when into next year their interest rates are still high? When you look at the debt circumstance where you've got $1 trillion a year, under this circumstance of constant higher rates, $1 trillion a year, I don't think that people can handle it. Are they going to be able to? They've got some issues. I'll tell you why. What about this? Student loan payments resume in between September and October. 56% of borrowers say that they will have to choose between their debt and buying groceries. That's kind of a big choice. That is more than half of the people. And what I've said before is that there's $400 on average for a payment on these student loans. They didn't have to pay for 3 years. Now they have to. And are they going to be able to default on that? I don't think so. And so the question is, what's going to happen to millions and millions of people who cannot pay back? Well, then we're going to see the circumstance change. This is debt. So you see how debt, as I talked about in the first section, we're looking at it here, and even in the third part, it's all connected with higher rates, of course. UPS suffered larger than expected shipment losses due to labor concerns. So basically, part of this, I just wanted to mention the fact that with what UPS has done, they, when they went on this during this period of time, negotiations and everything, all of their shipments were kind of diverted to other companies, which I'm sure the other companies loved. But this tells us that, number one, we're going to experience much higher prices. So it will be inflationary in that way. I mentioned on that video where we talked about the UPS strike, saying that the expectation is that the average worker will be getting a 6-figure salary. There was some comments suggesting that I was a liar, but here it is. It is now official. What does that mean? I mean, that's good if you're one of these UPS drivers. Absolutely good for you, good for your family. But it means they're either going to have to let people go, or they're going to have to, basically feed that cost down into the consumer. You want to ship something, it used to cost you $5. Now it's going to cost you $8. That's just the way it goes. The consumer will pay the bills. And I told you right here, you could see you've got the dependence on government welfare programs for more than 50% of people's income. It's aging demographics, right? Well, according to this, roughly 88% of every tax dollar goes to non-productive spending. Where do your tax dollars go? This is something that I've been asked many times to show, and here it is for you. The links will be in the description under the sources section if you want to, or you can just pause the video. Where do your tax dollars go? Look. Yes, you might say that this is important stuff, Medicare, Medicaid, Social Security, whatever the case is, but you're spending a lot of money on these things. Bloated systems. If you break down, and by the way, interest on the debt, 7%. And that number's rising. These are older figures, I believe. Look at it. Federal budget discretionary spending is 12%. If you break that down, education 3%, transportation and infrastructure is 2%. So if we don't pay our taxes, who's going to build all the roads? Who's going to do that? Well, that represents two out of the total 100%. So people have this misconception of where your tax dollars go. And of course, there's different things. There's like at the, your city level, you would have your state or province level, your national level. I get that. But just understand what I'm trying to get at here. You look at it, I mean, it's crazy to see that your tax dollars in most cases are being squandered. Like I said, you could say this thing is good and that thing is great. But when I look at this, I simply say, what's going to happen if we're spending more money on interest payments on the debt and we don't have enough for the infrastructure? We're going to be slowly but surely living under worsening conditions. When people are living under worse conditions, they don't spend money. They don't do things that are productive or positive. This is the circumstance for a lot of people right now, and it's getting worse. So that is part of this slowdown that we are going through and potentially will go through in 2024. What is the solution, though? Well, they intend on cutting those interest rates and doing some quantitative easing for all of us to enjoy. Yes. The only thing that I wanted to mention for this last part is just, quite frankly, to talk about the bubble fears in the markets because they're priced to perfection, okay? You've got low volatility at this time, as well as complacency showing how blind people are to the real economy. So all these real economy, everything that's happening, but AI and all this stuff is coming through. Every startup is an AI company now. Bubble fears are growing, just like we saw with .com, with the SPACs. Speaking of SPACs, the collapse of the EV SPACs. Another one goes bankrupt, another on the verge. Okay, you got Proterra. I've never heard of it in my life. Look at this, Rivian. Look at this, Nikola. Canoe, Fisker, Lucid, Workhorse, all of these things have been pounded to the ground. Investors losing their shirts, losing their investments, thinking, I'm going to get in the next Tesla. Yes. Well, I hope you do, but unfortunately, that doesn't work out for most. And then this is just showing us fear and greed index. When we look at volatility, the only thing I wanted to mention was when volatility is down, usually that's when people are the most greedy and then things flip in the markets. It just happens to be that way. If you look at the bets, calls and puts, right? These are bets that the market will go up, calls, and bets that the market will go down, puts. Usually when there's so many calls happening, the opposite happens because people all chase into one trade and then everything flips. What can you do, the individual, right? You want to know. You want to thrive. You want to prosper. Absolutely. One thing, find a broker, a reputable broker for any debt that you may have or insurance. You're going to be able to get better rates on, your everything that you have, any type of debt that you've got. It's a car loan, if it's a house loan, if it's a boat loan, whatever the case may be. You can find a broker that might be able to get you a better deal. I have done this, especially with insurance. You go out there, I have got deals of 50% from one quote to another on insurance. So do so. Look around. I just got a phone call from my service provider, internet service provider, saying, the competing service provider, by the way, hello, we'd like to offer you a deal that's like literally 1/3 the cost of the others. You've got to make those phone calls. I've done that. I do that regularly, once a year, twice a year, to try to get the best deal possible and extend that deal as far as I can. You could do the same. This is how you can definitely save some money. Don't be afraid to make some phone calls, okay? Over and over again. And find a broker, a reputable one. Consolidate any bad debt and negotiate new terms. A lot of times, if you have that debt, you go back to that company that you owe money to. You can say, look, I don't have this, but I do have this. I can pay up, and you could do a deal. So think about that. Consider it. Talk to the right people. Please just don't just stand there and take it. You can do something about it. You have power. You do, at least under your own circumstances. We may not be able to change the whole world, but we could change our world. That's what I want to share with you. Well, I want to give the comment of the day. Shout out right here. Jonathan Taylor says, I like how CPI excludes food and energy. Who needs such luxuries? However, even the government cooks can totally hide fuel and energy prices going up, which gets embedded into the price of everything. Absolutely. Thank you very much for that, Jonathan. I want to just thank you for that because, look, let's be honest. That's what we're dealing with, right? The prices go up. We just say, hey, I don't know how it happened. It's inflation. It's inflation. No, it's because of the devaluation of the currency. The prices go up, and that's what we got to deal with. All right. Do you want to join me and 1,000 other people online, totally free? Discord is the place to be. I post all the videos right over there. I've got information that will help you with getting out of debt. I've got self-sufficiency information about the money mirror method, all of that for free. Hit that link down below on the Discord. I'll see you there.